right, welcome back. Happy Tuesday. Welcome back to another Earnings Lottos Power Half Hour Live. I'm your host, Pete. As you know, we'll be using the next 30 minutes to go over the earnings reporting this afternoon and tomorrow morning. We are going to use earningslottos.com to find those strangles and see whether or not they are worth our hard-earned money to put some bets on them. As always, like the video, subscribe to the channel. It lets me know that you enjoy this content, that it's working for you. By the way, if anyone played Alta with me last week, you were very happy on Friday. So give yourself a round of applause, pat yourself on the back if you traded Alta. I think we called out the 360 put, or the 560p. I talked about the 530p for this week. I had the 570 for last week. The 570 went from $2 to $22, so that's $200 to over $2,000. The 560 went to like $1,500, $1,700 off of $100. So if you played Alta with me last week, you should have made money. And if you did, great job. You placed the trade. All we did here was just show you the data. That's all I do is I show you the data, and then we decide whether or not we place the trade. So without further ado, let's get into the earnings reporting this afternoon because we don't have a lot of time and I want to make sure that we hit them all. So this afternoon we have Lululemon, DocuSign, Oklo, Health Equity, QFin I kind of like. That's about it that I like for this afternoon. And then tomorrow morning I'll talk about the ones that I like there. But we will go through each of them individually, find strangles that we like, and then see if we take advantage of them. What up, M? Yeah, I will definitely talk about Oklo. Absolutely. There has been a lot of energy flow in options, a lot of BE and a lot of First Solar flow I've seen for some reason. So Lululemon, everyone knows Lulu. I'm actually wearing a Lululemon right now, but don't take that as gospel. I've had this for multiple years and I have not purchased anything Lululemon since. Actually, I didn't buy this. It was a gift. But anyways, I do like Lulu products, although personally, I think a lot of the things that Lululemon makes, other brands and companies make just as high quality, and they probably make them for a lot less. Therefore, their margin isn't as high of a markup. But regardless, we'll talk about the stock. We won't talk about the fundamentals. It's not really what we're here for. So good history of moves for Lulu, right? 5 out of the last 8 quarters, it has made a 10% move up or down, which we always like. That's what we look for here at earningslottos.com. We like that 10% threshold, and then we build our case off of that. So good amount of moves. 5 out of 8 is great. It's not a must play, but it's definitely not a must fade. Narrative intel is interesting for Lulu. It's a sleeper re-rate. Let's see, the retail sector isn't quite hot right now, but given Lulu's past history, it can definitely move big on margin. Like I just mentioned, it has pretty wide margins. Inventory, and if there's China demand, and that would just be in regards to the guidance. The strangles that we're picking up, the 180 call being a little bit more than 10% out of the money. Hard to really say. Great volume and great open interest, so there's still interest in this 180 strike today. The 145p, and this is hard, that $2.26 contract price, it's hard to tell right off the bat if those are bought or sold. I would imagine it's a mix. It's probably a half and half. The 145p, slightly more than 10% out of the money. I would say it's 10% out of the money down. Good volume over open interest. So that definitely tells me that people are anticipating some sort of Lulu downside here. I wish that contract was pricier. And if that contract was pricier, then it would tell me for sure that they're bought. I think earlier in the day when I looked at the strangle on the website on earningslottos.com, the put that it was showing was the 160 put, which is interesting to me because it still shows that there's interest in the put side, but the goalposts have been moved a little further back now. So maybe there's a mix of bought and sold here in the 145p. I don't think it's a must play. I think if you're an earnings trader and that's kind of what you focus on, Lulu is definitely one of your better opportunities this week. It has one of the more higher number of moves over 10% out of the last 2 years or 8 quarters. So I like these as like a straight up strangle. I like buying one of the 180s and maybe buying one of the 145s. Keep in mind that this is kind of hard to read. So if this chops, you can't necessarily be mad at it, but I would hesitantly say that it looks like I would say the downside is probably more realistic, but I just don't know how far it's going to go. That 145p, likely a lot of that volume could be sold contracts, and if that's the case, and if the 160 was the one showing for me earlier today, then I'm kind of thinking it's a less than 10% down move, and that's kind of what I'm kind of gonna bank on. I'm not gonna trade Lulu. Nothing here on this strangle kind of screams a must trade to me. But like I said, it's one of the better options for earnings this week. I tend to fade a lot of the earnings during OPEX week, so that's just my game plan, my strategy personally. And like I always say, don't take my strategy and don't take my game plan as gospel, right? We all have our own strategies. We all have our own game plans. I personally don't like to trade a lot of earnings during OPEX week, so that's just me. But Lulu, great historical, or I would say a good historical pattern of moves over 10%. And I like just buying one of each of these, one of the 180s and one of the 145s, but keep in mind this is a recipe for chop. So Lulu, I'm going to fade, but I don't hate it at all. I wouldn't be mad at you if you got a Lulu strangle. I would go, yeah, that makes sense. That makes sense. DocuSign, not as great of a move history, right? 3 out of the last 8 quarters, it has made a 10% move up or down. Decent EL score, good, not great. Stock price is kind of right on that threshold. It's a little too cheap for me. When Docu, like you can see the 90-day chart, when Docu was closer to the 80s or 90s, that's when I remember trading earnings strangles on it. So right now, like a 10% move off of this price is going to be maybe $5, which I don't know if that's really worth the squeeze to me personally. Plus, I'm coming off of that big Alta win, and usually when I've changed my strategy over the years, as you can imagine, but whenever I come off of a big win, I tend to kind of like pump the brakes a little bit, take a step back, maybe transfer some money out of the brokerage account, and then be very careful about where I deploy my money after that. In the past, when I remember when I first started trading, I'd get a big win and I'd go, oh, I have all this money now that I have all this liquidity I can use on positions. And that's kind of when you just kind of lose. So I take a step back, and that's what I'm kind of doing. That's what I did yesterday, and that's what I'm kind of doing today too. The narrative intel on Docu is interesting. We have another sleeper re-rate, which I like. I kind of like these sleeper re-rate pieces that the narrative intel is providing us. Software as a service isn't as hot as semiconductors, as everyone knows, but the AI workflow narrative can still re-rate this stock if growth accelerates. I had to use DocuSign very recently with a wealth management individual, so DocuSign is absolutely still being used in the professional business world. The strangles that we're finding for Docu, so the 50 call, 5% out of the money up. And that's obviously less than 10%, but that they expire this week. $1.66, kind of hard to say if these are bought or sold. I'd probably say there's a mix. And the 40p, so this is much easier to tell for me at least. The 40p, 16% out of the money down at 30, about 29 cents a contract. These are certainly sold in my opinion. So I would say Docu looks like traders are apprehensively betting the close to the money call side. And that is what I would say here. Docu definitely not a must trade. So nothing here kind of screams that we should get in a strangle. So I'm going to fade Docu as a result of that. But like I always say, if you have your own convictions and strategy, don't let me dissuade you from that. Oklo. So Oklo, nuclear power company. Like I said earlier, I have noticed a lot of Bloom Energy calls and a lot of First Solar calls. Last week, the beginning of this week, I've still seen them come in. So I don't know if that's related to the energy and oil spike and volatility, or if that's related to Oklo earnings. I don't know where it kind of all lies, but just thought I would mention that in case it it kind of turns a light switch for you. Two moves out of the last 8 quarters, it's made a 10% move up or down, so not the best history at all. $60 share price now, so a 10% move, you're looking at like 67, 68 up, and you're probably looking at like mid to low 50s down. Because of the amount of moves over 10% out of 8 quarters, Oklo is definitely not a must play. We are going to have to persuade ourselves or kind of talk our way into trading Oklo as a result of that. Good narrative intel. We have hot narrative torque, obviously, with power infrastructure and specifically nuclear power demand plays. There's good AI power demand. One of the purest AI power infrastructure plays here. Nuclear power demand for data centers has become a top institutional narrative. So Oklo is certainly one of the more popular names in that nuclear power demand type sector. And we'll look at the strangles. So the 70 call being 14.5% out of the money up. That's a little too ambitious for me. And this strike price really tells me that they're probably being sold. There's good volume over open interest. So I wouldn't say all of these are being sold, but I would imagine the majority of this 6,500 number that was traded today, and even the majority of this 4,200 number that was just sitting on the chain prior to today, I would imagine a lot of those are sold on the bid just because of the strike price, right? This is a really cheap contract. The 50p, even more so out of the money, down 18, almost 18.5% down. A very cheap contract, 23 cents a contract. That's very cheap. 2,700 volume, not more volume over open interest, but these look sold to me too. So Oklo, I think, is a fade. It does look like maybe I would say a small move up if I had to bet. But I don't like it, and so I would say it's a fade for earnings for me at least. But like I said, if you have conviction or if you know something I don't know, then trade it. And I would say hesitantly trade it to the upside. I just don't know if it'll hit this $70 strike. So that's what I think for Oklo. I think it's a fade, choppy move somewhere. Probably, I don't know if it's choppy. It's hard to tell if it's going to be up or down, but I would say choppy move up if I had to guess. Health equity. So one of the few healthcare stocks reporting this week. 1 quarter, it's made oh yeah, what up X Project? We're looking at it right now. So yeah, not the best EL score for health equity. Not the greatest history of moves over 10%. Only one quarter it has moved over 10% up or down. I will let you know that ESLT, so Elbit, we'll just look at it really quick. I didn't stream yesterday because there weren't that many reporting yesterday and this morning, and I just didn't really like them. But Elbit, so ESLT was one that I shared on X. I don't know if you guys saw it. I can't remember exactly what strike I shared, but it was over 1,000. Maybe it was like the 1010 or something like that. But Elbit, ESLT, only had one move over 10% in the last 2 years. And what did it do today? It hit almost a 15% move up. Actually, I think it's grinded up all day. I think it was like 9 or 10 a little while ago when I was at the gym, and now it's close to 15%. So just because it says 1 or 2 moves out of 8 does not mean it won't or it can't make a move. I just wanted to throw that out there. ESLT only had 1 out of 8, and it ended up making a 15% move today, which I thought was pretty cool. Where am I? So yeah, health equity. $80 share price. Oh yeah, exactly. Oh, I know you. Okay, let's go. Yes, sir. You're welcome. Thank you, X Project. Yeah, that was a sick call. That was a great call. X Project Group called that mid last week. So yeah, ESLT. Good job, X Project. Current price for health equity, $80. Right, a 10% move. You're looking at $8 up, 8 down. So high 80s, low 90s. And then potentially low 70s if it gets down there. Narrative intel, you're right, X Project, not the best narrative intel here. It's definitely a low move compounder. So it trades like a steady compounder rather than momentum off of an earnings report. But the 85 call here is getting some interest at $1.45. I kind of like that as bought. It's closer to the money. It's within 10% of the money. Not a ton of volume. I wish there was more volume over open interest on this 85 call. Then I would feel a little bit more comfortable about recommending it or getting it. I don't hate it though, right? I like the fact that it's within 10% of the money. I like the $1.45 price. That tells me that, right, there's probably a mix of bought and sold, but it's kind of right on that threshold. If it gets any higher, like close to $2 range, then I go, okay, those are probably bought. And then if it gets cheaper, like below a dollar, then I start going, okay, they're probably sold. So hard to really say what's going on there with the 85. I would say it's a mix of bought and sold. The 70p, that's a little bit more clear to me. So 70p, 12.5% out of the money down at a cheaper than a dollar contract, so 55 cents a contract. I would say these are probably sold. So if you want to join X Project Group, the man, the myth, the legend that called ESLT to move 10% when it had only done that once out of the last 2 years, maybe dabble in some 85 call for health equity. I actually don't hate that. I'm not going to do it myself because, like I said, I'm still riding the high on my Ulta puts. But I wouldn't, if you came up to me and said, hey, Pete, I got an 85p at $1.45, I go, great. I hope that works for you. I think that makes sense. So I don't think the 85 call here is a terrible idea, but I'm not going to be trading it myself. But definitely, if you got money burning holes in your brokerage pockets, so to speak, maybe get one of the 85 calls. Can't hurt, other than losing 145 bucks. So QFin we will look at next. So QFin Holdings, it's a fintech platform in China. Not a good, not great history of moves over 10%, 3 moves out of the last 8 quarters. It's a very cheap share price, just about $14.35 a share. So a 10% move off of 14 bucks really isn't that meaningful. And so immediately this kind of raises a red flag for me and what my personal strategy is. Narrative intel on QFin is not bad. We like the sleeper re-rates. There is good profitability in Chinese fintech companies. And the Chinese fintech stocks can definitely gap if credit quality and margins surprise. Going to the strangles, nothing really popping out to me. The 15 call, 35 cents a contract. Hard to say. I mean, they're almost 4.5% out of the money up. So I don't really know about that. I don't really know how I feel about it. 12.5p. These are probably, the 12.5ps are probably sold. So if I had to guess looking at QFin, I would say probably a small move up, but not enough here to make me spend my hard-earned money on them. We'll look at Next Nav or NN Inc. Don't know much about this company. It's pretty cheap in terms of share price. Only 2 moves out of 8 over 10% up or down, which isn't really great to me, especially on such a cheap share price. Narrative intel, not great at all here. They do have a defense story, so that's always interesting, especially with all the geopolitical BS happening right now. And the strangles that we're finding for NN aren't really that appealing to me. I guess the 1850, it's a little bit more than 10% out of the money up. Good volume over open interest. But the 15p is the exact same price. So this could just be a straight up strangle. It could be. It's just hard to tell. I always hate trying to force a trade in something like this. So I would say NN is certainly a fade, but the 1850 is getting good volume over open interest. That's interesting. So hard to tell exactly what's happening here. I'd say probably a choppy move in one direction or the other. Don't anticipate it hitting 1850, and I don't anticipate it hitting 15. So probably somewhere in between there. Trevi Therapeutics, TRV, I don't know anything about this company. One of the few healthcares this week. No moves over 10% in the last 10 years. Very cheap share price. Very low EL score of 1. Not the greatest narrative intel. And the strangles that we're pulling up are not attractive at all. So we'll go ahead and just move on from that one. FLD, I'm not going to look at again. So very, very cheap share price. No moves over 10% in the last 2 years. I don't like that at all. J-Bill. So J-Bill, now we're on to stocks that report tomorrow morning. J-Bill is not this is not the JBL audio company that you might think of it as. It's more of like a tech company. They focus on AI, cloud, data centers, communications. That drives the majority of their revenue. And they also dabble in some robotics and warehouse automation. So JBill, great share price. JBill used to have a more consistent history of moves over 10%. I want to say JBill used to be 5 or even 6 moves out of 8. But now, as you can see, it's 3 moves, 3 quarters. It's made a 10% move up or down out of the last 8. And really, it's just been probably the past 2, 3, maybe 4 quarters that has contributed to this lower number. So if you look at its history, I want to say like 6, 7, 8 quarter range, so 6 quarters ago, so kind of thing. That's when it was making the 10% moves. And then it's only been like recently, the past 2 or 3, 4 quarters, that it has kind of chopped or not really made an impressive move. So there's something to keep in mind. It used to be a good mover, and for some reason, in the last 3 or so quarters, it's kind of done nothing. So you're right, X Project. This might be a good candidate as a result of that. Really good narrative intel for JBill, like we were saying earlier. A lot of AI server and cloud, so data center build out that they're working on. They kind of focus on electronics manufacturing and data center infrastructure, which both of those are obviously kind of hot topics and hot sectors right now. JBill has explicitly cited accelerating demand across cloud, data center infrastructure, networking, and capital equipment. And they raised their FY26 guidance on AI strength. So JBill is they are personally bullish only because of data centers. But hey, look, we follow trends in the stock market. What was it like 10, 15 years ago? It was pot stocks. Then it was AI. Now it's data centers. It used to be nuke. It just we follow the money. We follow the money here. Wow, look at this. This is crazy. Look at the strike. So the 285 X Project, you're onto something, bro. The 285 call, 9% out of the money. So that's within 10. The strike price here, the contract price, so 255, not the cheapest, not the most expensive. Look at this volume. So 1250 volume over 9 open interest. This screams immediacy. This screams that traders came in today anticipating to buy these 285s. They weren't there before. So the traders came in today to buy the 285s in anticipation of JBill's earnings. So I kind of like this. I mean, it's an expensive lotto, right? It's a $255 lotto if you get one contract. But look at this volume, 1250 over 9. So there was 9 contracts that were bought and sold, just opened, or not sold, but well, it could be sold. But anyways, 9 contracts on the chain that were just there as open interest, and over 1,200 were bought and sold today. So that is interesting to me. The 260p, this is a classic. Like, they're hedging downside with the 260p. I would imagine that the 285s are probably bought, and I would think that the 260s are probably bought too. This looks like a safe strangle, right? They bought the 260p. Very, very close to the money. A good number, 1,200 or so that were bought versus 1,800 that were open interest. So, and that's a very, very pricey put. So here's what I would say for JBill. I would say it's not right. There's not, if it were 6 moves out of 8, 7 moves out of 8, or even 8 moves out of 8, must play. Absolute must play. For this, 3 moves out of 8, it's not a must play. And so what I would say is, it being not a must play does not mean you have to strangle it. So I don't hate getting one 285 call. Like, that's actually a good idea with something like this. You don't want to get 2. I would say if you get the 285 call and you got to put, you might be hurting yourself if JBill doesn't make a 10% move in one direction or the other. So I kind of like the 285 lotto. I'm going to put a pin in it and come back to it at the very end and look at it. Look at the contract chart. I kind of want to see exactly what it looks like, but I don't hate that 285 call for JBill. Microvast Holdings, very, very cheap stock, $1.61. I can't stand this price range. That's way too cheap for me. But it has a great history of moves over 10%, and that's because it's so cheap. Look, it's down 30% today. So I don't like, and there's not liquid options either. So I don't like Microvast. We'll just skip it. Let's look at William and Sonoma. So this one's interesting. William, WSM. So William and Sonoma, if you guys don't know, they do more like luxury furniture and that kind of thing. They're kind of like Restoration Hardware, except without the whole resort aspect that RH has. Maybe they're like a fancy lazy boy. I don't know if that makes sense, but anyways, they also look like they own Pottery Barn. If you know Pottery Barn, little Hobby Lobby type stores. So good share price, 180, about 183 share price, 183 bucks per share. So 10% moves, about an 18 or 19 bucks up or down. Three moves, over 10% up or down out of the last 8 quarters. That's not great. It's not good. It's kind of in the middle, I would say. Narrative Intel is interesting on WSM. It's a sleeper re-rate. Let's see. The recent commentary emphasized brand resilience and guidance support despite a still tight housing backdrop, which makes this a cleaner consumer sleeper than most retail. So, despite the kind of bearishness that has been in the housing market, WSM has emphasized brand resilience and good guidance, which is good to know as for the company health. So housing prices and that kind of thing haven't really affected William and Sonoma, which is good. That's bullish. The strangles that we're pulling up, so the 210, 15 and a half, 15% out of the money up. Good volume over open interest, right? But these definitely look sold to me. This 210 call looks sold at 80 cents a contract. Whereas the 165p is about 9.5% out of the money down. They expired this week as well. Really good volume over open interest here at $2, 207 a contract. I think these are bought. I'm going to put a pin in WSM puts and come back to that too because I kind of like this setup. So the 165p maybe worth a Lotto too. This is not a must strangle for sure, right? It's only a 3 out of 8 mover, so definitely not a must strangle. I think buying just one side is okay, and I kind of like this 165 side a little bit better. So that is interesting. We'll come back to that. Spire Global, pretty cheap stock, 1088. Looks like they're a provider of space-based data, analytics and space services. Powerful insights about Earth from the ultimate vantage point of space. You know what's interesting? So this company, Spire Global, reminds me of Planet Labs, PL, which reports this week too. And I don't know if you guys saw, but Planet Labs, I don't know if it was I think it was last week, just because all this has happened so quickly. But last week, Planet Labs came out and said, "Hey, we're not going to do any satellite imagery over certain countries in the Middle East." Hint, hint. So I just thought that was interesting, and that's kind of just what's been in the back of my mind. So Spire Global seems like they're very similar to Planet Labs in that regard. Four moves over 10% in the last 8 quarters, but it's a $10 share price, so that doesn't really mean much to me. Not the greatest narrative intel here. Planet Labs has better intel, so I think what my game plan is going to be, because for some reason, like I said, PL or Planet has kind of just been in the back of my head. I'm going to keep an eye on SPIR. I want to know what their numbers are tomorrow morning. I want to hear about their guidance, if they talk about anything going on geopolitically. I'm just kind of curious to hear what they talk about because I think that'll give us some nuggets for PL. But I don't like these strangles at all, so I'm just going to go ahead and skip them. OSS, too cheap, I think. Zoma, no moves over 10% in the last 2 years. That's a skip. Momo, so Hello Group. This one used to be pretty popular for shares, kind of when ONDS was getting off the ground. I would say that's a fade. Sale Point is interesting, but only one move over 10% in the last 2 years. I think that one's a fade too. And General Mills is certainly a fade. This is a Costco kind of stock to me on earnings. If this one makes a 10% move, well, I'm not going to say that because it's $38 and a 10% move is $3. But so I don't anticipate this one making a 10% move at all tomorrow. So what did I talk about? And Weibo, I don't like it either. It's too cheap. So what we want to do, by the way, when I kind of gloss over stocks, I like to keep my list smaller, right? We like quality over quantity. That's the whole point of this website and the whole point of these streams. So let's come back. I think we wanted to look at, what did I say? I liked the J-bill call. What was it? The 285. Let's look at the contract chart on the J-bill call really, really quick. The J-bill 285. Let's see what that looks like. And I also want to see if they are bought or sold. Contract chart looks good on the 285. I don't see anything bad there. Let's look and see if they are bought or sold. I want to say they are bought. That was my guess earlier. And they are all, there's a ton bought. So I like the 285 call for J-Bill as a lotto. It's a little pricier now, but I do like that 285 call for sure. Just know it's a lotto, and J-Bill doesn't have the strongest history of moves over 10%, but the 285 call for J-Bill is not a bad idea at all. I'm not going to get it. It's a little too pricey for me, and like I said, I'm coming off the Alta win, and so I'm just trying to protect my capital a little bit right now. WSM put, let's look at that. Same kind of situation as J-Bill, right? Not the best history of moves over 10%. But that strangle, these numbers are interesting to me, and so as such, we will check it out. And this contract is cheaper than the J-Bill one, so if I want to feel something, maybe this one's a good option. The contract chart is not bad at all. I would say it's not a must play, but it's definitely not a must fade. There is hope to the contract chart there for the WSM 165p. And then let's see if they are bought or sold. I think my guess before was a mix. And yeah, it's a mix. It's a pretty big mix. But between 3:20 p.m. and 3:30, there was 190 contracts on the ask and 110 on the bid. So to me, this looks like a little half and half action, but I don't think it's enough for me to get a 160p. I don't know if I think this is a must play. What would we buy it at right now? So you'd buy it at $2.13 if you bought it right now. So for me, I think I'm not going to buy this, but again, like I said earlier, if someone comes up to me and says, hey, I bought a WSM 165p, I'd go, you know what? I think that makes sense. I think that could work. I'm a very, very safe kind of conservative type trader. Let's look at HQY one more time because X Project Group is making me look at it. Not making me, but in my head, I'm like, yeah, I should probably look at it. The 85 call for Health Equity. We got 5 minutes. 85 call, 85 call. The 85. I don't know if I like the 85. The contract chart, I don't know. It could work. It could work. It doesn't scream must trade to me. Yeah, I don't know. I'm apprehensive about the HQY 85 call. I would say fade it. That's just me. So I like the WSM 165 put. I like the J-Bill 285 call. I like them apprehensively. I don't think they're must plays, but like I said, if you came up to me and said, hey Pete, I got a contract of each, I'd be like, you know what? You only, what do they say? You got to pay to play. Scared money don't make money. That's what I would say. I'd say scared money don't make money. I am scared money. Let's look at the earnings pick'em. I got 4 minutes to place a bet. Oh yeah, that's right. Lulu and Oklo. What did we say for? So I think for Oklo, I was saying up. And we have. Let's see if we can. Okay, so let's look at the leaderboard really quick. Because look at this absolute beast of a man, Timbo Flip, 20K. This man, Timbo Flip, cannot be beaten. And unfortunately, he hasn't placed any bets yet this week, so I can't copy off of him for this. And that frustrates me, but that's all good. I will do, let's see. So everyone's on Lulu down. Look at this. 3,300 on Lulu down, 200 on up. I think Lulu, what did I say? I think I liked the up. I mean, it's so hard to tell with these strangles. The 145. I'm gonna say up. I like the up. I think it's gonna be a small move up for Lulu. So that's what I'm gonna say. I'm gonna say small move up for Lulu. I'm gonna put 500 on it. And then Oklo, I think I liked up as well. So I'm gonna do. I don't know if I was as confident with Oklo as I am with Lulu. Oklo. See, this is so hard to tell. This is choppy. This is a choppy move one way or the other. I don't like it. So I'm not going to play Oklo for a pick'em, but I'm going to do Lulu up. So we'll do that. We'll just keep it 500. We play small, play often. That's how I stay in the game. So 500 on Lulu up. And we will call it a day. So I'm not trading anything myself. You still got 2 minutes to place orders, but I would say the J bill call. I don't mind that, and the WSM put. I don't mind that either. Everything else to me kind of looks like a gamble today, but that's why we are here. We're here because we gamble. So, like I said earlier, if you traded, if you were able to trade Alta last week and got that with me, great trade. Remember, you did 99% of it. All I did was stream this video and show you the numbers on a website. So, as always, I hope this was helpful for you guys. I will tune in tomorrow afternoon. I'll try to get on a little bit earlier because we have a couple more names to go through. None this week, I will say none this week really stand out to me as must trades. And like I said earlier, that's because of OPEX week. I anticipate some chop. Tomorrow we have FOMC decision, so that's at 2 p.m. Eastern. So make sure if you don't like volatility, get out before 2 p.m. of your positions. But just know that if there is sideways movement for the rest of the week, it's probably because it's OPEX week. Something to keep in mind. But as always, I hope this was helpful for you. Like the video, please subscribe to the channel, and I will see you tomorrow around the same time. Peace, everyone.